FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 6/11/19. Hey, don't forget, we're doing our Bitcoin contest here. Email us kl@kerrylutz.com with your prediction for right around my birthday, what the price of Bitcoin will be. I'm talking about July 20th. That's 7/20/19. Person who gets closest will win a pre-1965 quarter. I'm going to publish my prediction. If I wind up closer, nobody wins. Sorry, got to be something in it for me. So again, kl@kerrylutz.com. In the meantime, looking at the economy, well, the markets have rebounded after the Mexico fiasco, which turned out not to be such a fiasco, I guess. And economy doing pretty good. Job numbers, a little bit down last month, but 1 month does not a trend make. May, historic weak month in any event. We're getting to the weak part of the year anyway in the summer for job creation. Our good friend Al Caicedo is with us now, and we're going to be talking about this. Al, so economic performance. We had 3% growth first quarter. Pretty good. Looks like we'll be pretty close to it this quarter as well.
Yeah, I think as far as the GDP is concerned, I think it's hanging pretty tough considering the fact that, you know, all the tariff issues that we're facing and have faced. You know, we still got the ongoing thing with China. Like you said, Mexico really didn't become a very big deal at all. What we're seeing right now really is that things are so far going the way they should be, and as predicted for this year.
Mm-hmm. Yeah, so job numbers, though, they were very off last month, but they've been strong for all but 2 months. Is it cause for concern, or are we just worrying about nothing here?
Well, in my opinion, I think that when it comes to job numbers and things like that, I think it's something that needs to be paid close attention to. However, they really haven't been. They've been somewhat off in those 2 months, but if you look at the consistency of it right now, as far as the job market is concerned, it stayed pretty strong, and that kind of goes with the rest of what we were trying to, seeing in the rest of the economy, where it's kind of moving along at its own pace. What we're not really seeing though is a lot of really growth in wages though. Mm-hmm. So that probably concerns me more than the job numbers that get posted.
Yeah. So wage growth, but it was going a few months. It went, up at a 3% annual rate, which is higher than it's been for a long time.
Yeah, for almost over a decade. But we're still seeing the fact that if you compare it to 2007 and things like that, we're still not really where we should be as far as wage growth is concerned. So we're seeing the jobs, but overall, at least we're not seeing enough in wage growth.
Mm-hmm. Yeah. Well, so is that going to pick up, or what's going to happen? Inflation's been fairly subdued, at least as measured by the twisted measure of the consumer price index, or the CPI. We going to see income start to increase? I mean, if nothing else, they've gone up for people who've benefited under the new tax law, right?
Well, under the new tax law, we've seen income go up, but not at anywhere when it comes to the tax law. It's giving some type of tax relief, but we haven't really seen big numbers as far as what people are bringing in because of the tax relief itself. Now, we are getting the fact that, there are a lot of states moving, minimum wage up, and that has helped the numbers look a little bit better, because we're seeing, states now going at $12 an hour. We're seeing states going to $15 an hour. And so all that also plays into it, how sustainable that is and what that really means in the future as far as wage growth is concerned. It's going to be interesting, and it all is going to depend on as to where is this economy really heading, because there's a lot of warning signs out there. The big one, of course, being the yield curve and what that means to the economy, and that's always been a precursor to a recession being within a year and a half off. We sort of feel that it's not when this market is going to, if this market is going to correct. It's just when it's going to correct. Mm-hmm. So it's going to be interesting to see what's going on. The Feds right now are holding tight. They because of what was going on with the trade, with all the trade issues we have. There's talk about we feel like they're going to suspend it, but there's even talk about the fact that they were wanting to lower those interest rates again. Mm-hmm. So when there's still manipulation of the economy, it's kind of weird. It feels that we're good, but it doesn't feel like we're on steady ground.
Mm-hmm. Yeah. Well, the tree does not grow to the sky, but look, the stock market took the hit from the Mexican debacle, and what happened? It's back. Looks like it's heading towards a new record, isn't it?
Yeah, it is. It rebounded quick. Mexico was just a small hiccup. And I think as far as the markets are concerned, we were kind of like this last year. Remember, around this time last year, we were saying we were hitting new numbers and everything like that. But then came December, and December wiped everything away. That also lets us know how fragile the markets are, that any little bit of news can really rock it, and any little bit of news can take away whatever gains were possible for the year. And I kind of feel that everything stays okay if there's no more chaos, if there's not a weird tweet that goes out or something like that. I think that, we should be able to sustain through the rest of the year, but we'll also have to be careful with the fact that any little thing, I think, can rock us. And when we learned that in December of this last year. Yeah,
well, the economy, never quite achieved so-called normalcy after the crash. We still, as far as interest rates go, the Fed seems to be determined to drive prices down, right? To drive rates down, rather. Don't you think that's a net positive?
FSN Radio. It's all about what's next.
Egypt is on the verge, once again, becoming a world-renowned gold producer. The golden age is being rediscovered. For millennia, ancient Egyptian kingdoms prospered from unparalleled riches. Pharaohs built their empires and flaunted their abundant wealth that was made possible by the country's resource-rich gold deposits. Despite this rich history, modern Egypt remains one of the most underdeveloped gold mining countries in the world. Aton Resources is at the center of the modern Egyptian mining world, diligently working both as the only public exploration company in Egypt today and as the advocate for mining reform with the Egyptian government. However, those that arrive early like Aton will reap the best rewards. Aton's discovery of the legendary Lost Mountain of Gold at Rodruin and its current aggressive drilling program there could potentially reap those rewards. Aton Resources is focused on its 100% owned Abu Marawat concession in the Arabian-Nubian Shield, located 200 kilometers north of Centamin Sakari's world-class gold mine. Aton possesses first-mover advantage in the under-followed jurisdiction of Egypt, which is currently undergoing mining reform. To stay on top of Aton's latest drill results and news, go to atonresources.com. Aton trades on the Toronto Venture Exchange under the ticker AAN and on the OTC under the ticker ANLBF.
The Financial Survival Network. It's all about what's next.
With rates going down, now I don't feel that rates. I think rates should stay steady. I don't feel that if they actually lower rates, that means that other things are going on, and it doesn't give me the warm fuzzies as to the true strength of the economy, because we're manipulating again and playing with interest rates. That's just another tool, another bit of sugar being put into the system, and letting the market say, okay, you're going to be okay, but we have to do this. The market should be able to behave the way they should. If the economy is going as strong as it is, an interest rate a reduction wouldn't really be called for.
Mm-hmm. Yeah, well, it could be slowing down. The Fed, right? We agree the Fed knows all this stuff, right?
Sometimes I don't know. They're so confusing, but yeah, they every time they do something, you got to scratch your head, and every time they're thinking about something, you got to scratch your head. But yeah, but for good or bad, we're really tied into what they do. So again, all that plays into what's really happening in the economy today. I mean, we're seeing consumer spending really high right now, but savings is low. So there's a lot of people out there right now that they have what I call balance sheet euphoria. They see their 401k, they're kind of hanging in there, so they're spending money, but they're saving less. So, there's things that this economy, there's that sense of everything's okay, but I still feel that we're on really fragile ground.
So, in other words, you're seeing red flags here, or black swans on the horizon, huh?
I think we have some strong headwinds coming towards us, and I don't feel as super psyched as some are, but I'm also not being pragmatic about it. I'm not down on the economy. I just say I think is a really proceed with caution type of a moment. Keep your ears open. Make sure you have defenses set up in your savings plans, and be vigilant.
Yeah, well, you always need to be vigilant because you never know what's going to happen here. So yeah, our savings rate, obviously, but other things seem to be going pretty well. Housing's still pretty strong, right? And rates have only helped that a bit. Does that inverted yield curve, does it always come true? Is it always right?
So far it's always been right. and we've got to keep an eye on that. When the bond market is they're a precursor to a lot of stuff. And that yield curve flattening out and inverting is never a good thing, because you got to understand that when that happens, that's how banks make their money. And when they get squeezed out, then the flow of money stops.
Yeah. And
it's hard to lend.
This is very true.
And that's what leads to, that's always a precursor to saying, things are not that great. Mm-hmm. So it's something that, some people are not worried about it, others are not. I always say, so far it hasn't been wrong. So it's happening for a reason, and it needs to be, it needs to stay somewhere in the back of your mind and say, okay, that's why I say caution, Yes. No need for drastic stuff to happen. However, I think you still need to have your defenses in order.
Correct. Yeah. Well, forewarned is forearmed, right?
Absolutely.
Yeah. So what do you think is going to happen next here? What are we looking at as far as, you think we're heading for this recession, or can they put it off for a couple of quarters?
I don't think a recession is imminent, like within this year. I don't feel that. And typically, anytime we've seen an inversion of the yield curve, it's usually like a year to year and a half off. Mm-hmm. So I don't foresee anything as far as that is happening for this year. However, anything can rock the economy. That's what I'm saying. The Mexico rocked the markets just on that little bleep. So it just all depends on what kind of news and what kind of economic agenda that's coming from the White House too. So it'll be interesting to see, but I don't feel like we are in a recession anytime soon within the next 108 days or so.
Usually takes them a year to figure it out after we're in the recession anyways.
Yeah, it does. And that's why you start seeing the numbers about a year and a half after.
Yeah. But if you had bought bonds a few months back, you would be very happy right now, both with your higher rate return and your capital gains.
Correct.
So bonds could wind up being the leading investment for 2019, couldn't they?
It has a possibility. It just it all depends on what the Fed does with these interest rates. So if they lower it, then no, that's not going to happen. If they remain, they have the possibility of being something that people need to start acclimating themselves with.
Agreed. I totally am with you here. So, hey, well, if you want to connect with you on the web, find out more about you, Al, where do we go to?
Hey, you can always see us, visit us at summitgp.com, summitgp.com.
All right. And as always, we'll have a link. Don't forget our contest. I want all of you to respond. The question is, what will the price of Bitcoin be right around my birthday, 7/20/19, July 20th, 2019? The prize, if you beat me out, is a pre-1965 silver quarter, 90% silver. It's worth roughly a couple of bucks. I haven't looked at the price of quarters lately. I'll let you know the next time. But just email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. We got some great articles on there. Great Florida articles too. Al, it's always great having you on. We'll talk to you again real soon.
Take care, buddy. You have a great birthday if I don't talk to you before.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.